Let's get creative about getting out of debt. You may realize in this economic environment that some of these options aren't available to you for various reasons. May not be your fault, but that's the environment we find ourselves in. So we're going to talk about interest rates today. I put on this show 3 times a week, specifically about the economy with respect to interest rates and things that will help you get out of debt and ways to get out of debt. I also put on multiple videos to help you get out of debt, usually whiteboard videos describing methods. And so that's what we're going to discuss. What are interest rates these days for the various types of loans? Where do I think they're going? And what can you do and how can you be creative if some of these options just aren't available to you? Okay, so thank you for watching. Please subscribe if you haven't already, or hopefully you will by the end of this video, and hit that like button, leave some comments so I know that this is actually being helpful. I really appreciate that. So let's talk about interest rates in general. I'm going to throw up some rates, current rates here on the screen. I've been going over these every couple of weeks so we can just kind of get an idea of where we currently are. First, look at credit cards. This is Lending Tree. This was June 13th, and they put this out every couple of weeks. Credit cards in general, the rate's around 24%, not great. All right, personal loans. This is a Business Insider. This is June 24th. They put this out every couple of weeks. You see, personal loans, like anything else, depends on various factors, such as credit score. They have low of 6%. I'd be surprised if anyone gets that. The average is around 11.6% for a personal loan. We'll talk about that in a moment. Then car loans. This is NerdWallet, June 27th. Middle of the road credit score look like it's about 9.6% for a new car, 13% for a used car. Then if we look at mortgage rates, this is just Google showing us that middle-of-the-road credit score is around 7.5% for a 30-year. Now let's talk about some of these different types of loans. Personal loan, credit card. Typically, there's no collateral. Okay, what does that mean? Well, with a car loan or a home loan, the collateral is the car or the home. If you don't pay the car loan, you don't pay the home loan, they take the car, they take the home, they sell it, and it may pay off your debt. With a personal loan or these credit cards, if you don't make the payment, they can't come and take anything from you. What does that mean? Well, because we're not in the greatest economic environment right now, a lot of bank lending standards are getting tighter, meaning it's getting harder to even get a personal loan. So that means that in a tighter lending environment like we find ourselves in, even for people with great credit scores, they may not be able to get some of these credit cards with a 0% balance transfer. Take your 24% debt credit card, you move it over to a card with 0% for 12 months. If you can make the payments over 12 months, you're out of debt. You took a getting out of debt in 4 years scenario and you moved it to a scenario where you got out in a year. Sounds great. But even if you have a great credit score, you might not be able to get those. Maybe you moved to 24% to a 12% personal loan. Again, you may not be able to get those. And in the past, it was typically because someone didn't have, let's say, a great credit score. But now, they're just tightening standards, and they may not want to do it for anyone. So what do? Well, then you can become creative. I'm not talking about things that aren't legal. I'm talking about doing things a little differently. And I've put out multiple videos to do these different methods. First, let's talk about the balance transfer. I'm going to put links to 3 different videos here below. The balance transfer, you don't have to use it to go to a 0% balance transfer method. I've got a hack where I show, hey, here's how you move money to another credit card without doing a transfer, without calling up and saying, move the money from here over to there. You essentially, and you got to watch the video so I can explain it, but you're putting expenses on one card and then removing them off of another card. Why would you do that? Well, if you're not able to get a 0% card, maybe you've got a 24% credit card, and maybe for some reason you've got a 16% credit card. It does make a difference. If you could get it from the 24 to the 16, that would be better. So there are ways to move it over without actually doing a transfer. Watch that video because it hopefully will make you think of other creative things you can do. Here are 2 more. If you happen to have a cashback card, will give you anything cashback, just make sure you're applying that to help pay down your debt instead of taking it out and using it for something else. Lastly, and this is a very interesting one, I've got one on how you can use your car loan to pay off your credit card by refinancing your car. So watch that video, it goes into detail, but essentially this is how it works. I've done this before. I actually did it when I was getting myself out of mounds of debt. I took my car, I called up and they said, and I had paid off, I don't know, let's say 2 or 3 years of my car loan. And they said, okay, you owe roughly $12,000. I'm just making some numbers up here. I don't recall the actual numbers. You owe roughly $12,000 on the car. We looked it up on Kelley Blue Book. We believe it's worth $18,000. Okay, so there's $6,000 difference there. You can refinance your car. I was calling to get a lower rate at the time, and they said you can take out more than the $12,000. And they offered me, I think it was maybe 16, not the full 18. They give you a percentage of it, but like 16. And I thought, wow, that's great, because the car loan at the time was maybe around 7%, let's just say. And I had a credit card with a high interest rate. So I took that extra, I owed 12, paid off the old loan. Now I have a car loan for 16, so yes, my payments went up. Theoretically, they didn't, because instead of paying off in 3 years, I now had another 5-year car loan. So now I've got another 5 years to pay this off. But I'm able to take that $4,000 and pay off part of the debt of my credit card, which was at, let's just say, 20%. So I was able to move some of my debt essentially off of the credit card at 20% and onto a car at 7%. That made a difference. Now, why I was able to get a new car loan and refinance? Because that one has collateral. You're going to find in economic environments, bad economic environments, if you can't get a loan for some reason, you may be able to get one when you have collateral like a car. So I was able to refinance the car and use that to get rid of some higher rate debt. So consider options like that. Thank you for watching. As always, this isn't financial advice. It's just educational purposes. I hope these help you. Please do subscribe. And as I always say, if you want pure freedom, you need financial freedom. Have a great day.